Welcome to Money Made Simple. This is where I take confusing money topics and make them easy to understand. If your books look messy and confusing, or you don't know where your money's going, the problem might be your chart of accounts. Today I'll show you what a chart of accounts is, why you need one, and how this easy template can help get you organized in minutes. A chart of accounts is like a filing system for your business's money. If your system is messy with random names or missing categories, you'll get reports you can't trust. Tax times will be very stressful, and you may not know if you're making any money. A chart of accounts, or COA, is just a list that sorts every dollar related to your business into the right place. It has five main parts: assets, liability, equity, income, and expenses. Assets are what you own, like your bank account or computers. Liabilities are what you owe, like credit cards or loans or money to different vendors. Equity is the money you put into your business or that you have earned in your business and keep in your business. Income is all the money that comes in from your sales or also from interest if you have a lot of money in your bank account. And expenses is the money that's going out for supplies, rent, anything you need to buy to purchase products if that's your business. When these are all organized, it allows you to easily create financial statements such as a profit and loss, a balance sheet, and it also makes it so your financial books are clear and easy to read. Here's what a clean chart of accounts looks like. You can see you have assets, liabilities, equity, revenue, and then expenses, and you can see the accounts are broken down by that. So here is something where you have a cash account. You could enter in, let's say you have two cash accounts. So you want to be in the next number. This is 1,000. So I'm going to add 1,001. And I'm going to say this is cash at Bank of America. The other account is cash at US Bank. Over here, I'm going to write a description. Checking account at Bank of America. Checking account at US Bank. You can do that anywhere on here. One thing I would probably do is I would probably break down my PP&E, which is property, plant, and equipment, a little bit more than this. So I'm going to break it down into three different buckets. My first is 1501 and 1502. And then I'm going to make this PP&E land, PP&E vehicles. Computers. And then over here, I'm just going to write a description. This is for the land at XYZ. And right there, you can just write the address. It's just something so you know what it's for. Because if you look at this 10 years down the lane, 10 years in time, it gets confusing sometimes. Vehicles purchased, business vehicles. Business computers. And this is what I'm using for an example. It may or may not make sense for your company. Some companies don't even record computers in PP&E because they're just not expensive enough anymore. The other thing is you can easily delete things from this too. Let's say my company doesn't have any intangibles. I'm going to highlight them, right click, highlight, right click, and do delete. Here's for assets. Same thing. I don't have any payroll payable, so I'm going to delete them. If I want to change this description, I easily can. This is another description. Sales is where you may want to break it down. Let's say you have two income sources. So I'm just going to add the next number. Sales source 1, sales source 2. And over here, just write whatever description you have. Ooh, can't type today. Here's for your cost of goods sold related to your sales. If you don't need that, you can delete it. But if you do need it, I would recommend having one set of cost of goods sold for each sales category so you can break down your gross margin, which I will talk about in a different video. Source 2 cogs, source 1 cogs. Here are typical expense accounts that a lot of businesses have. It's set up in numerical order, but if you need to break things down, so let's say, for example, utilities are an important part of your business. This chart of accounts shows them together, but you could also say 5221, and this could be electricity, and 5222 could be water. You get the point. You can completely customize this however you need. And then the nice thing about having a chart of accounts, and this is where it's important, is that all of your assets, liabilities, and equity, which are used for your balance sheet, are together. So everything that starts with a one, that's an asset account. If you're ever looking at a chart of accounts, if you're ever looking in your accounting software and you see an account number that starts with a one, that's an asset. Same thing with 2 for liabilities, 3 for equity, 4 for revenue, 5 for expenses. This is also nice. Let's say you receive a invoice from a vendor. You need to mark it somewhere as an expense. If you type in a 5, it's going to hit up all of your expenses, and that allows you to say, okay, I know it's an expense account. Then you can start looking through them to make sense to see where it should go. Want to save some time? Download this ready to use chart of account template. It's already set up. You saw how easy it is to modify, and it'll keep your business money organized. The link will be in the description.